Eric Mother with Mother.com. Just want to do another video here because we are currently seeing the market in the first 2 weeks of 2016 where the VIX is trading above 20, which means that we can pay more attention to the smaller time frame if we want to figure out what markets are doing short term. So remember, when the VIX is elevated, let's say in the 20s or higher teens, 18, 19, 20 and above, it tends to be that the smaller time frames are more controlling in terms of what markets are doing. So let's take a look at today's action. And here I have a saved chart for what the Dow was doing. At the highs of the day, the Dow was up 330 points when I saved this chart, with about 45 minutes to go before the market closed. The reason why I saved this chart is because I knew that the market was coming to an area where it would pull back, because if you take a look at the line we've been drawing on the 30-minute on the hourly chart, so hourly chart, this line here has been a problem for the market, and I've talked about this in a prior videos. Break there began 2016, and we had come back to test that same line. On extending that line, the market at the highs of the day when the Dow was up 330 was coming back to test that line. I was suspecting more than likely the market could pull back, so the market would go on to shade a third of this gain by the close. If we take a look now at the closing price for the Dow, you can see it closed up 227 points, and now we can see that on the same 30-minute chart, if we draw the same line, what I was looking for in terms of resistance was exactly where the market pulled back on an hour-to-hour basis. Now keep in mind, this is more relevant whenever the VIX is again above 20, because that means that the smaller time frames, being that the market is very volatile, the smaller time frames tend to be more controlling. So that's why I was suspecting a pullback off those levels. Is another way to take a look at this is take a look at the break level short term. That break point brought the market off the highs. We draw a line from here, something like that, and you can see that the market has used this once before for short-term resistance there for the highs there. And again, the market at the highs of the day when the Dow was up 330 points, the market was coming back to test that line, and as long as the market is showing resistance, you can see that we are seeing a pullback. Clearly, if the market wants to move higher beyond the highs of the day, it needs to clear that red line, and also it needs to clear this trend line here. So the only way the market goes higher short term is if it can clear those two lines to the upside. Now if we take a look at the S&P 500 at the highs of the day, here with about 45 minutes to go, S&P 500 was up 2.27%, and you can see that the market had come back to test the previous line where it had seen short-term resistance, which is right there. So that's where the market was trading. My suspicion was that since it had already shown resistance short-term during this level here, it was not out of question that the market would see resistance. So this is how the market looked before the pullback into the close. You can see that now after the close, the market is showing that exactly resistance was seen exactly where we were expecting resistance at the highs of the day. So that's why the market pulled back. Keep in mind that we also closed below 50, which might explain the steep drop going into the close, because as you move below 50, you tend to get some type of a big move lower. Take a look at the S&P 500. Now you can see that this was also where it was testing this line. The line that was a break coming into the drop here was being tested again. You can see previously was resistance at the highs there, and during the highs of the day the market had come back to backtest that line, and of course we did see resistance, hence the reason why we pulled back. Take a look at the Nasdaq, and unlike the other charts on this video, this one has an RSI period of 14, which is the traditional RSI. The other charts had a RSI period of 26. So just to be clear, this is 14 period RSI, and you can see at the highs of the day, here's what the Nasdaq was doing in terms of its hourly RSI, and again here we were using RSI period of 26. The market was coming back to test this line. Now this seemingly simple line was a break point here towards the end of December. off the highs there, and then was resistance again here, back test failure at the highs there, back test failure during this double top for the highs here, and then we can see the market was coming back to test the same line and it failed. If we take a look again at the hourly chart for the Nasdaq from a different point of view, you can see that this line is also being tested and it failed coming into the last hour of the session. Take a look at the 30-minute chart. So again, 30-minute chart, RSI period of 14, similar type analysis. The same line was being back tested here. The break line was again being back tested, and at the close the market did confirm. So this chart shows what happened after it came back to that level. I saved the chart, and now we are looking at the market showing resistance. That's why the market was off the highs at the close and pulling back. So remember again, when the VIX is elevated, we need to pay more attention to short-term analysis because the market tends to be very volatile, and if you want to find the peaks and the troughs, you are better off using the smaller time frames whenever you see the VIX trading above 20. Eric Muadit, Muadit.com. As always, good luck, peace, and blessings. ESCS.